with its production comes with a very significant resource. We have 812,000 ounces of gold grading 5 grams a ton in the measured and indicated categories. We also have an additional 359,000 ounces of inferred gold at 5.17 grams per ton. Our resource was calculated at a 2.54 cutoff at a $925 gold price, all of which were NI 43-101 compliant, performed by SRK International as of June 30th, 2009. What is most important to note is the potential that exists at Turk Mine is for an additional 1.5 to 2 million ounces of gold. This potential was identified by SRK International at the Turk and Angeles mine. Some quick highlights on the Turk and Angeles mine. The mine exhibits a potential to produce between 35 and 50,000 ounces of gold per year. Currently, the Turk and Angeles mine is operating at a 14 to 15,000 yearly gold production profile. The mine has 11 plus years of reserves that are ready to be mined, and anticipated cash costs are estimated to be less than $550 per ounce. The next stage of our growth is to move to 22 to 23,000 ounces of gold production, which is our next target. With this, anticipated cash costs are looking to decrease further. Massive overdevelopment has also occurred at the Turk mine, putting the asset well ahead of the curve. There is in excess of 20 years of mine life at maximum output at the Turk mine. Newdon Mining has an NI 43-101 report on gold properties in the Greenstone Belt in Zimbabwe. We have 4 options on mineral exploration claims in the district, all of which were past-producing mines. Within this area, several shallow mines exhibit potential at depth. Newdon, at these properties, is looking for properties that exhibit the potential for high tonnage, low-grade ore, amenable for open-pit mining. Consolidation opportunities is a focus of Newdon's growth strategies. We see many opportunities in the region, and Newdon is positioned as the natural in-country consolidator. We are currently looking at advanced exploration properties, former producing mines, and former producing gold properties as targets for our acquisition strategies. In the third quarter of 2009, Newdon produced 2,931 ounces of gold. From this, 2.87 million in revenue were generated from the sale of 3,122 ounces of gold. The cash costs for Newdon were $503 per ounce. This allowed Newdon to enjoy EPS of 1.6 cents a share before other income and expenses. Additionally, Newdon reported US 2.5 cents a share of income before non-cash items. Again, it is notable to mention that 100% of gold sales received by Newdon were in US dollars. As of June 30th, 2009, Newdon had working capital of approximately $3.67 million. We also enjoyed cash and equivalents of just over $3 million. In October of 2009, the company received an additional $2.38 million from the third-party sale of a bond which it held. What is notable is Newdon has no long-term debt and no funded capex. Additionally, Newdon is owned 62% by institutions, while management and directors own an additional 8% of the company. The capital structure of Newdon Mining is very attractive. Currently, the shares trade on the TSX under the symbol ND, as well as on the Frankfurt Exchange under the symbol 3DM. The current share price of Newdon is approximately $1.50, which produces a market cap of just under $44 million. What is very important to note is Newdon is a gold producer with a large 43-101 compliant resource in production, with production increasing monthly, with only 29 million shares outstanding. Fully diluted, Newdon exhibits a float totaling 32 million odd shares. Newdon is positioned for growth. Currently, Newdon is a gold producer, and we have planned scalable production increases to reach. Firstly, our target of 35 to 50,000 ounces of gold output potential per annum. We have a gold-producing facility which is easily expandable, and we have recently reported to the market that we have expanded capacity from 400 tons a day to 580 tons per day. We have a large, independently audited gold resource in excess of 1.2 million ounces of gold, audited by SRK International. As production increases, we are pleased to report that it has been consistent that our cash costs decrease. And most notably, at maximum output, the Turk and Angeles mine have a 20-plus year mine life. New Dawn is positioned for growth. Our goal is to become a mid-tier producer by 1, firstly expanding existing production at our Turk and Angeles mine, 2, by acquiring other producing mines in the region, and 3, exploiting exploration potential of the portfolio of exploration properties, all of which were past producers. It is most important for one to note that key management resides in country. What this does, it best positions New Dawn as both the operator of the Turk and Angeles mine as well as the consolidator and acquirer of other producing mines in the region. With this, ladies and gentlemen, we like to deliver shareholder value to the benefit of all stakeholders. Thank you so much for your time.